ExamPrep.School. Maine Multiple-Peril. Crop Insurance Adjuster Exam. Exam code 12-ME-33. There are 6 practice exams in the series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Crop insurance. General insurance terms and concepts. Maine laws and rules for all lines of insurance. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. In contract law terms, which of the following best describes the offer and acceptance elements in an insurance agreement? A. The insurer provides coverage quotes and the applicant verbally binds the coverage. B. Advertising reduced commission rates to clients on new policies. C. The applicant pays the initial premium and the insurer acknowledges receipt of payment. D. The applicant submits an application and the insurer signifies consent by issuing a policy or binder. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is D. Offer is the applicant's submission of a completed application for coverage, and acceptance is the insurer's consent, typically signified by issuing a policy or binder. Reason A is not correct. A quote is not a formal proposal under contract law, and verbal binding does not replace the insurer's formal acceptance via a policy or binder issuance. Reason B is not correct. Paying the premium is part of the consideration element, not the acceptance of the offer. Furnishing a policy form alone does not constitute acceptance. Reason C is not correct. Payment acknowledgement is an administrative act and does not itself form the contract's acceptance. Offer and acceptance refer to proposal and assent. Question 2. Which of the following accurately identifies the 2 primary elements of consideration in an insurance contract? A. The insured's payment of the premium and the insurer's promise to defend any suit. B. The applicant's completion of an underwriting questionnaire and the insurer's issuance of the policy. C. The insured's payment of the premium and the insurer's promise to indemnify covered losses. D. The insured's duty of disclosure and the insurer's promulgation of endorsements. The correct answer is C. Consideration in an insurance contract consists of the insured's payment of the premium and the insurer's promise to indemnify the insured for covered losses. Reason A is not correct. A promise to defend is specific to liability policies and is not the fundamental indemnity promise that forms consideration. Reason B is not correct. Underwriting and policy issuance are procedural steps and do not constitute the exchange of value required for consideration. Reason D is not correct. Disclosure duties and endorsements are contract obligations or modifications, not the core premium and indemnity exchange. Question 3. A farmer applies for a crop insurance policy to protect his opium poppy field against hail damage. After hail destroys most of the crop, the insurer denies the claim, stating the crop is illegal to cultivate. Under the legal purpose requirement for enforceable insurance contracts, why is the policy unenforceable? A. The contract violates the legal purpose requirement because it ensures an illegal agricultural activity. B. The contract lacks an insurable interest since the insurer does not legally own the crop. C. The contract is void due to misrepresentation of the crop type on the application. D. The contract fails the indemnity principle by potentially allowing profit from a loss. The correct answer is A. The contract's object is unlawful cultivation of opium poppies, so it fails the legal purpose requirement and is void as insurance cannot be written for an illegal enterprise. Reason B is not correct. An insurable interest exists because the farmer owned and would suffer a financial loss from the crop's destruction. Reason C is not correct. There is no evidence that the crop type was misrepresented. The denial is based on illegality rather than false statements. Reason D is not correct. The indemnity principle concerns preventing profit from a covered loss, not the lawfulness of the insured activity. Question 4. Which characteristic distinguishes speculative risk from pure risk? A. The existence of potential for financial gain. B. Insurability by traditional insurance carriers. C. Occurrence of catastrophic events only. D. Predictable frequency of loss events. The correct answer is A. Speculative risk includes the potential for financial gain, whereas pure risk involves only loss or no loss. Reason B is not correct. Insurability by carriers is not what differentiates speculative from pure risk. Reason C is not correct. Catastrophic events may be pure risks but do not capture the gain aspect. Reason C is not correct. Replacement cost before depreciation is not paid under H08, which uses ACV. Question 5. A policyholder intentionally provides false financial records during a claim to inflate the payout. This action exemplifies which type of hazard? A. Moral hazard. B. Moral hazard. C. Physical hazard. D. Legal hazard. The correct answer is A. This is a moral hazard because it involves intentional dishonesty to increase the likelihood or severity of a loss. Reason B is not correct. Moral hazard involves careless or indifferent behavior, not deliberate fraud. Reason C is not correct. Physical hazard relates to environmental conditions, not intentional acts. Reason D is not correct. Legal hazard arises from laws or court decisions, not an individual's dishonest action. Question 6. A crop field becomes waterlogged due to an irrigation leak just before a severe hailstorm. After the storm, the producer records a significant drop in expected bushels per acre. In this scenario, which elements correctly correspond to hazard, peril, and loss? A. Hazard is the waterlogged soil. Peril is the reduction in yield. Loss is the hailstorm. B. Hazard is the hailstorm. Peril is the waterlogged soil. Loss is the reduction in yield. C. Hazard is the reduction in yield. Peril is the hailstorm. Loss is the waterlogged soil. D. Hazard is the waterlogged soil. Peril is the hailstorm. Loss is the reduction in yield. The correct answer is D. The waterlogged soil represents a condition that increases the likelihood of damage, hazard. The hailstorm is the actual event causing damage, peril, and the decreased bushels per acre is the measurable financial impact, loss. Reason A is not correct. This treats the yield reduction as the peril rather than the financial impact of the event. Reason B is not correct. This reverses the definitions of hazard and peril. The storm is the peril, not the hazard. Reason C is not correct. This misidentifies the measurable outcome as the hazard instead of the loss. Question 7. Which best describes the primary purpose of a claim notice under a property insurance policy and the rationale for prompt reporting? A. To define reserves for incurred but not reported losses and expedite settlement processes. B. To document pre-loss conditions for insurable interest verification before payment. C. To satisfy the policy condition requiring timely notification so the insurer can investigate and mitigate the loss. D. To adjust the sum insured and recompute the premium based on the extent of damage. The correct answer is C. The correct answer is that a timely claim notice is a condition precedent in most policies. It triggers the insurer's duty to investigate, allows mitigation efforts, and preserves evidence. Reason A is not correct. Reserving for IBNR losses and settlement speed are insurer processes, but not the insured's claim, notice purpose, or reporting rationale. Reason B is not correct. Pre-loss documentation and insurable interest verification occur at underwriting, not through the insured's claim notice. Reason D is not correct. Some insured adjustments and premium recalculations are underwriting functions, not the insured's immediate notification obligation. Question 8. What is the primary function of a proof of loss and which of the following is typically required within it? A. To satisfy insurer's prompt reporting requirement, must include detailed witness statements and a police report. B. To establish insurer liability and quantify loss, must include the insured's declaration of value, date and cause of loss, and itemized inventory. C. To verify risk transfer and adjust premium, must include premium owed in prior claims history. D. To initiate subrogation and salvage procedures, must include salvage rights agreement and recovery endorsements. The correct answer is B. The correct answer is that a proof of loss formally establishes the insurer's liability and quantifies the claim amount. It typically requires a sworn statement of value, date and cause of loss, and an itemized inventory of damages. Reason A is not correct. Witness statements and police reports go beyond standard proof of loss requirements, which focus on quantification rather than eyewitness or law enforcement documentation. Reason C is not correct. Premium adjustments and prior claims history relate to underwriting and rating, but are not part of a proof of loss submission. Reason D is not correct. Subrogation and salvage documentation occur after proof of loss and are not standard proof of loss contents. Question 9. Which of the following best describes the primary objective of multiple peril crop insurance, MPCI, within farm risk management? A. Providing long-term financing for farm capital improvements. B. Stabilizing farm income by protecting against yield and revenue losses. C. Offering liability coverage for agricultural operations. D. Insuring farm equipment against mechanical failure. The correct answer is B. The correct answer is stabilizing farm income by protecting producers against yield and revenue losses from covered perils under MPCI. Reason A is not correct. Financing capital improvements is outside the scope of MPCI, which focuses on production and revenue protection. Reason C is not correct. Liability coverage addresses legal claims, not losses from weather or production risks. Reason D is not correct. Equipment breakdown insurance covers machinery, whereas MPCI covers crop yield and revenue perils. Question 10. Which program participant is primarily responsible for underwriting policies and settling claims under the federal crop insurance program? A. Licensed insurance agent. B. Approved insurance provider. C. Producer. D. Risk management agency. The correct answer is B. The correct answer is approved insurance provider, which underwrites federal crop insurance policies and processes claims on behalf of the USDA. Reason A is not correct. Agents sell and service policies but do not underwrite or settle claims directly. Reason C is not correct. Producers purchase coverage and report losses but do not underwrite or settle policies. Reason D is not correct. The agency administers and regulates the program, but does not underwrite or settle individual policies. Question 11. Which entity serves as the operating arm of the Federal Crop Insurance Corporation, charged with administering and overseeing the federal crop insurance program? A. Agricultural Marketing Service. B. Risk Management Agency. C. Federal Crop Insurance Board. D. Farm Service Agency. The correct answer is B. The correct answer is the Risk Management Agency, which functions as the operating arm of the Federal Crop Insurance Corporation to administer the program. Reason A is not correct. The Agricultural Marketing Service handles commodity marketing programs, not crop insurance oversight. Question 36. A claimant with multiple orthopedic injuries is not improving under standard treatment. Which action best facilitates a certified medical consultant CMC review for complex injury management? Reason D is not correct. The Farm Service Agency administers other farm programs, but not the federal crop insurance program. Question 12. During a field inspection, an adjuster consults the loss adjustment manual to verify procedures. What is the primary purpose of the loss adjustment manual in crop insurance claims adjustment? A. Provide underwriting guidelines for policy issuance. B. Prescribe premium rate calculation procedures. C. Standardize methods for field adjustment inspections and settlements. D. Outline policy cancellation and non-renewal protocols. The correct answer is C. The Loss Adjustment Manual establishes standardized procedures and guidelines for field inspections and claim settlements to ensure consistency across all crop insurance claims adjustments. Reason A is not correct. Underwriting guidelines are issued by the rating manuals and policy forms, not the Loss Adjustment Manual. Reason B is not correct. Premium rate calculations are covered in rating manuals and actuarial documents, not in the adjustment manual. Reason D is not correct. Cancellation and non-renewal procedures are part of policy provisions, not the field adjustment standards in the manual. Question 13. While reviewing multiple crop insurance policies, an adjuster notes that the basic provisions include standardized elements that apply across all crops. Which feature is specified in the basic provisions? A. Requirement to provide notice of loss within 72 hours of discovery. B. Specific price selection options available for individual crops. C. Crop rotation and management practice standards. D. Approved yield factors unique to each crop type. The correct answer is A. The basic provisions set uniform requirements, such as the notice of loss deadline for all crop insurance policies, ensuring consistency across different crops. Reason B is not correct. Price election options are determined in crop provisions, not in the standardized basic provisions. Reason C is not correct. Management practice standards are specific to certain crops and appear in crop provisions or special provisions. Reason D is not correct. Yield factors by crop are detailed in actuarial documents and crop provisions, rather than the basic provisions. Question 14. An adjuster compares the basic provisions with the specific crop's provisions and observes differences in coverage terms. Which statement accurately distinguishes crop provisions from basic provisions? A. They override any conflicting basic provision terms for that particular crop. B. They specify uniform notice deadlines applicable to all crops. C. They define general policy structures common to all insured crops. D. They set underwriting rules for premium rate approvals. The correct answer is A. Crop provisions contain crop-specific terms that supersede any conflicting basic provision language, ensuring that unique crop conditions are addressed. Reason B is not correct. Notice deadlines are established by basic provisions and apply uniformly, not by crop provisions. Reason C is not correct. General policy structures are defined in the basic provisions, not the crop-specific sections. Reason D is not correct. Underwriting and premium rules are covered in rating manuals and basic provisions, not in crop provisions. Question 15. An insured grows soybeans on 2 separate tracts in the same county and holds varying ownership shares. According to policy definitions of unit, acreage, and share, what unit classification applies to all soybean acreage in that county? A. Basic unit. B. Enterprise unit. C. Optional unit. D. Section unit. The correct answer is A. A basic unit groups all insured acreage of the same crop within a county, regardless of share percentage, as defined in the policy. Reason B is not correct. Enterprise units combine multiple crops or practices under one unit. not all acreage of a single crop. Reason C is not correct. Optional units separate acreage by share or tract, rather than grouping it all together. Reason D is not correct. Section units are not a recognized policy grouping term in MPCI definitions. Question 16. Under the MPCI, actual production history plan, coverage levels can be elected in 5% increments within which range? A. 60% through 85%. B. 55% through 80%. C. 50% through 75%. D. 65% through 90%. The correct answer is C. Under the APH plan, producers choose coverage levels in 5% steps from a minimum of 50% up to a maximum of 75% of approved yield, with higher selections increasing premium and reducing deductible. Reason A is not correct. Coverage never extends to 85%. The APH plan's upper limit is 75%. Reason B is not correct. That range extends beyond the maximum 75% coverage available under the APH plan. Reason D is not correct. Coverage levels do not reach 90% under the traditional APH plan. Question 17. Which statement accurately describes the yield and price election for catastrophic risk protection? CAT coverage under MPCI. A. 60% of approved yield and 60% of the projected price election. B. 50% of approved yield and 55% of the projected price election. C. 50% of approved yield and 100% of the projected price election. D. 75% of approved yield and 55% of the projected price election. The correct answer is B. CAT coverage provides basic protection at 50% of approved yield with a 55% price election. Producers pay only an administrative fee while the government covers all additional premium. Reason A is not correct. Both yield and price elections must be at 50% and 55% respectively, not 60%. Reason C is not correct. The price election is fixed at 55%, not the full projected price. Reason D is not correct. CAT coverage does not offer 75% yield election. It is limited to 50%. Question 18. The supplemental coverage option, SCO for MPCI, provides county-based loss coverage equal to the difference between which two percentages? A. 86% and a fixed 65% coverage level. B. 100% and the elected MPCI coverage level. C. 86% and the elected MPCI coverage level. D. 100% and the projected price election percentage. The correct answer is C. SCO covers county losses between the elected MPCI coverage level and the county trigger set at 86%, filling the gap up to that higher percentage. Reason A is not correct. The lower bound varies with the chosen coverage level. It isn't fixed at 65%. Reason B is not correct. SCO is capped at the county trigger of 86%, not 100%. Reason D is not correct. SCO relates to coverage levels, not price election percentages. Question 19. A corn producer insured under a revenue protection policy experiences a yield shortfall and a harvest price below the projected price. Which feature distinguishes revenue protection from yield protection? A. Indemnity is paid solely based on yield losses using only the projected price. B. Indemnity is calculated using the greater of projected price or harvest price multiplied by yield shortfall. C. Guarantee is reduced when the harvest price falls below the projected price. D. Coverage applies to yield losses without considering market price fluctuations. The correct answer is B. The correct answer is that revenue protection uses the higher of the projected price or the harvest price when calculating indemnity multiplied by the yield shortfall, whereas yield protection uses only the projected price regardless of market fluctuations. Reason A is not correct. This is incorrect because revenue protection considers price levels, not just yield losses at the projected price. Reason C is not correct. This is incorrect because revenue protection does not reduce the guarantee when the harvest price declines. It may use the higher price instead. Reason D is not correct. This is incorrect because revenue protection explicitly includes market price changes in its indemnity calculation. Question 20. Under a revenue protection policy, a soybean grower selects a price election of $11.50 per bushel when the projected price is $11 and elects a 70% coverage level. How will this election affect policy liability? A. Liability remains unchanged because liability is based only on the projected price. B. Liability increases proportionally to the elected price exceeding the projected price. C. Liability decreases because a higher election lowers the acreage guarantee. D. Liability is capped at the harvest price and not affected by the election. The correct answer is B. The correct answer is that liability is calculated as approved yield multiplied by elected price and coverage level, so choosing a price election above the projected price increases total liability proportionally. Reason A is not correct. This is incorrect because liability calculations under revenue protection use the elected price, not just the projected price. Reason C is not correct. This is incorrect because a higher price election raises the dollar guarantee per unit rather than lowering acreage guarantees. Reason D is not correct. This is incorrect because liability is not capped at the harvest price when a price election is in place. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.